Hi, Clint Coons here with Anderson Business Advisors, and in this video I am going to be discussing the Nevada Asset Protection Trust. All right, so what is a Nevada Asset Protection Trust? Well, it's a trust that is what we refer to as a self-settled trust. It's a trust that you create with the explicit purpose to protect your assets from creditors. It's probably one of the strongest entities you can use when it comes to asset protection. And a lot of people have heard about it, or maybe they've researched it and they've shied away from it because when they look at the details of setting this entity up, they think, wow, I have to give up control or some aspect of control to a third party. I'm not comfortable with that. What do I mean by that? Well, typical Nevada Asset Protection Trust, the way it's set up is you're going to have a couple trustees involved. You have what's going to be called an investment trustee. Okay, this person is the one that is in charge of making all of the investments. So this is my investment trustee right here. Then you're going to have a distribution trustee. Okay, a distribution trustee is someone who distributes the money from the trust to the trust beneficiaries. So the beneficiaries are going to be down here. Now, oftentimes with a Nevada Asset Protection Trust, if you were setting it up, what you'll do is you'll nominate yourself as a beneficiary, you'll have your spouse as a beneficiary, and you'll have your kids as beneficiaries. And the distribution trustee over here, that individual has the ability to make distributions to anyone they want under the terms of this trust, because that's what they get to do. That's what it's called, distribution trustee. So if there was $200,000 in here, this distribution trustee could give $75,000 to this person, $10,000 to this person, $20,000 to the spouse, something like that. Or we could structure it where the distribution trustee should put a primary emphasis on these two individuals, this one not so much. This one only gets paid when these two aren't getting paid. There's different ways you can structure this. Now, the distribution trustee is not you. It cannot be you. All right? So right then and there, people often look at it and go, well, if I need the money, why would I want to set something up where I can't give myself the money, that somebody else is controlling it? And I don't even know if I trust this person or not to be in that position. So why would you do this? Well, number one, it provides tremendous asset protection. That if you get sued, you know, if you have an LLC, they have the charging order. In some states, they allow you to break the charging order and get after the LLC itself or its assets. With an asset protection trust, it's outside of your control. If somebody came after you, they can't put a charging order on this. They said, hey, give us the money. I can't. I'm not a trustee. I can't distribute the money out to myself. That's a third party. The way it has to be set up is you have to have an attorney or an individual trustee in Nevada managing the distribution of those assets. And oftentimes we'll even have a trust protector put in place as well. So it takes away the argument that you could distribute money to yourself, because you can't, because the distribution trustee is the one that's in complete control of this. So this tool is extremely beneficial for individuals who really want to protect their investments. But what has stopped people, as I stated, from going forwards is they don't have control of the distributions. You will be the investment trustee. So this is you, okay? This does equal you. So you get to decide how the investments are being made. So let's assume that you wanted to create an LLC up here to buy an apartment building. You could do that. Okay, you could direct the funds to be invested over here, and if this is kicking off income every year of $90,000, well, you can't take that out and distribute it to yourself because you don't have that control. That's your distribution trustee. So you have to ask them for money. Well, if you want some of the premier asset protection that you can get in this country without having to go offshore, screw around with those types of creative strategies that oftentimes get you in trouble with the IRS, which, by the way, one thing I didn't mention, this trust, grantor trust, ignored for tax purposes for you. So that's another benefit of having this. You don't have to get crazy on the tax side and filing a bunch of tax returns and paying higher tax rates. So if you want control over that income, then what you should do, the way we structure these, is we set them up where we'll create an LLC right here that's going to be owned by this trust. We'll give the trust a 90% ownership interest, and we'll give you a 10% ownership interest of this LLC. Now this LLC would be a Nevada LLC or Wyoming, something like that. And you're going to be the manager of the LLC. You see, you might even know where I'm going with this now. You're the manager of the LLC. The LLC is going to own all of your real estate LLCs. And that can be existing assets that you hold. This isn't something you have to create new companies. It can be existing structures. I'm working with somebody right now that has 25 properties. And what we did is we took and we put each of those 25 properties into a series LLC into different cells. We have it held into a Nevada LLC. The individual here owns 10% of this and is the manager, and we gave 90% over to this asset protection trust, APT, just like that. Now, all of the rental income from the sale of properties is going to flow as follows. From these LLCs right up here, I don't care if you sell, you get rental income, it all flows down into this limited liability company here, and that one has a bank account. Now, once it hits here, this entity now can decide where the funds are going to go, right? It can distribute money to here, and if it puts the cash down in this entity, well then this person has to decide if you get any money. Or it can do this. It can distribute the cash to you because you decide to make a distribution. When we create this LLC, we have certain provisions in there, special provisions that state that the manager can make non-pro rata distributions. That means they don't have to be equal. You can give 100% of the money to the guy that owns 10%. But the reason you're allowed to do that is because you structure this LLC in a way that requires the manager or this member, if they take out more than they're entitled to, eventually they're going to have to pay it back. Well, who am I paying it back to? Paying it back to myself over here. So it allows you to have access to all of your funds. You can control everything through your LLC here. It's 90% is owned by this asset protection trust, 10% is owned by you. You take the money, you pay it out to yourself as you want on a monthly, annual basis, and the day a creditor comes along, you stop paying yourself money. The most the creditor could go after, what they could take from you, is your 10% interest with a charging order. But who cares? At that point in time, since this company is going to be owed a lot of money because you've never given it its 90% share, the future income that's coming in here, you just keep dumping it right down into here and nothing's going to go down into your way. And so that creditor's never going to get paid. This strategy works great for people that are in a high-risk profession or you're just really concerned about creditors coming after you. Setting up an asset protection trust in Nevada is going to take those assets beyond the reach of your personal creditors. So if you're in a high-risk field, this is something you ought to consider. If you live in California, you know those dreaded California franchise taxes on business entities? Here's another way to structure yourselves, using trusts. The franchise fees do not attach to trusts. They only attach to business entities. So if you had 20 properties, there's a way we could structure those properties for you through Nevada Asset Protection Trusts that you would avoid the franchise taxes in California. So it's a great tool. If you want to learn more about it, be sure to go in the show notes, sign up for a strategy session. You can talk to one of the strategists at Anderson Business Advisors. We can look at it and see how it works out for you, or make sure you make it out to one of our 3-day asset protection workshops where we'll discuss this tool and how it can be applied to you in your investing. My name is Clint Coons with Anderson Business Advisors.